Hey everybody, this is John. Welcome to the free video. So one of the things I want to look at here was Roku. Had a nice little pop on volume today and had a couple of questions on how to play it, how to play kind of a momentum type stock like that. So main thing I look for there is going to be volume plus momentum. So this is Roku, and what I'm looking for here, so how this works, this is a 5-minute chart, is that if the bars are yellow, it just means the action is neutral. There's not a lot of interest in it. Nobody's really selling it. No one's really buying it. If it turns green, it means that momentum has shifted positive. Now, if you get green plus dots, it means momentum has shifted positive, plus you have volume on that particular bar that's 50% above average. Now, when you see something like that, that is a momentum trade, and you can hop in and just get in and ride it until those dots disappear, and then you're just done. And then you just kind of wait for the next consolidation. Now, it stayed green here. We got a little bit of dots, and then we just kind of waited for the next 5-minute squeeze. When you get the red, that just means that the momentum has actually gone to the negative now. It's just losing momentum, losing momentum. When it goes red, what you're looking for then is that yellow, because when it goes back to yellow, we're going back to neutral. We're starting to hook back up. And the arrows here kind of tell you that, hey, we just took out the high of the low bar here. Let's get this thing going. And so on something like this, you get in, and we had momentum all the way into the close, so we held it overnight. Now, could be a good idea, could be a horrible idea. We never know what's going to happen overnight, but a lot of times when you get momentum like this overnight, you get people excited about it, and then you start looking for, okay, well, what are the next kind of targets on this? And when we mapped out the fibs, you can see that we got a 618 at 124. That would make sense. And then you got this prior high here right above 130. So in a perfect world, maybe we dip down a little bit at the open, but we'd look for a probe at that 124 level to kind of ease out of that momentum type trade. All right. So from there, the question I'm getting the most is, well, what about the indexes? What about the indexes? Keep in mind, this is triple witching week. Okay. This happens every quarter. I would be very, very careful. There's a record amount of long calls expiring this week, and the markets are very, very efficient about making sure, and we'll see if the spiders come up here. Yeah, the markets are very, very efficient about making sure that a lot of those options kind of expire worthless. What I would look for Wednesday, Thursday, and Friday is more chop. We had a huge couple of days here from the highs, but remember, up here and up here is when a lot of people were loading up on calls. Okay, the market is like, here, 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 here. We got record amount of open interest in long calls, and the market is really good about looking at that and saying, eh. And so I wouldn't be surprised to see the market trade sideways to slightly down the rest of the week, just to ensure that all the calls on the indexes, on all the speculative stocks, take your pick, just expire worthless and just break a lot of hearts and dreams of newer traders on Friday. And then once we get through Friday, I'm looking at my particular strategy is going to be looking at strong stocks and buy them on pullbacks, but I'm going to start hedging the indexes as well. When you got record hedges and the record long calls and skews over 137, I can't not hedge. So I'll be long stocks like, hey, buy the dip on Tesla, buy the dip on Shopify, but throw on some bearish butterflies on the SPX to cover your backside. All right, that's what I got. You guys have a great night, and we'll see you at the next update.